Okay, hi there, guys. Let's just see who's in. We haven't got many in at the moment. That's probably caught a few off guard being on the Tuesday instead of the Monday. Let's just get started anyway. We have a few drifting in as they come along. All right, just let me know if you can hear me loud and clear. G'day, Peter. Could be just you and me, mate. All right, let's get started. Welcome to Trade Setup and the live stream. Will be the 19th of Feb. For anyone that's new, just remember what you see on the screen. If you can link into us on Twitter, much appreciated. And that's our Twitter handle, I think you call it, the top left-hand corner. So it'd be at trade_setup. Top right is a Facebook, and the bottom right, probably the more important one, is to subscribe to us at YouTube. And that way you get pop-ups every time we go live with a stream or anything that goes through. Also, we're going to give general advice, so none of this is personal advice, specific advice or anything. So just remember that. It's just our own opinions on markets. We're not saying what to buy, when to buy, how to buy. We're just trying to help out, really. So let's get up and running. Not much to talk about. The US was closed last night. Oh, sorry, before I get going, I'll probably have to rush out. So it'll only be about 50 minutes this stream today. I'll have to run out. I'm on kinder duty today. My wife's away. She's a primary school teacher. She's away on camp for the week. So I'm on kid duty, which is why I couldn't do it yesterday. So sorry about that. Sorry for all this confusion, but we'll be back to regular Mondays next week. So let's rip into it. It's closed. Close that. How do I close that? Let me just close it. Come on. Right, there we go. And transition. All right, we are right to go by the looks of it. All right, so the US obviously closed last night. They had, was it President's Day holiday last night, so they've had a long weekend. They're back on action, back in the thick of it tonight. The main theme still at the moment is the China-US trade negotiations, and I think the market took off on Friday. I think it's something come out on the China Newswire or it's Chinese press about they're going well, they're coming to tentative agreements on different things, but I think the main thing for sticking points for the US is still on their technology. I don't know how you'd say that, technology stealing or um, that sort of stuff. So once that gets worked out, they've got more negotiations. I don't know. I think it's this week, um, or maybe next week, end of this week or the start of next week. So that's in the US now, away from Beijing. So that could bring a bit more. I mean, it's going to bring volatility into the market because the market will be hanging on every word they say. Into commodities too. So, I mean, you can even see today if anyone watches the SPY 200, it's not choppy, but it's just a bit heavy, but it's still grinding higher. It looks like it's tipping over, been a bit top heavy, and then bang, off she goes again. So it is a bit of a tough one. I think what we're seeing now is this is the XJO on the, just sticking it up, the XJO on the market here, and markets fell over and then turn around, bank straight back up again. And this is on the daily time frame. So it's been grinding high. It's still holding that daily trend. I thought we would have banged down there, pushed up, and then rolled over, retested a high low. But instead, we've just, as soon as we got through this high, 59, say 50, 59.30, these previous highs here, I'm basically on this green candle, which was start of Feb, 5th of Feb. It was pretty much on, and there's a lot more setting up after that. Before that, it was a bit tougher to pick a nice trade, and really, if you pick something through here, it's just, to me, it was more guesswork or really short-term setups. But now there's a few playing out. Okay, we built up, I think, about 5 positions now, going well. There's a couple that it's not going so well, and one is COL today. But basically, my theory is just trade what you see. I know they have reporting out, which probably some say it's good, some say it's not so bad. Sorry, it's pretty bad, but I'm on the fence with that one. I actually don't think it's too bad, and it's a big stock. I think they obviously gapped down and it's bumping back up again. we'll see how that one goes. But really, there's a few, since that break, there's been a few setting up a bit better and a bit cleaner. And you can see the market's just, it's been consolidating below that 6100 mark. And if we go, you can see this little pop up consolidating just below 61, tipped up through there. Well, originally back on, what was that, about 7th of Feb, and then again yesterday, and we're on our highs today. We're just pressing higher today. So that for me is a nice little, cup and handle. You got the handle here, bit of a cup, pressing higher. So the next zone to press up into is really up towards 62, where we saw that original sell-off. Everyone can see that, I guess. 62, which is this zone up here when we originally sold off from the highs, bounced down, grinded our way back up, and that was where we sold off and really got hammered after that. So we're basically pressing back up into that 6200 zone. Has been a tough one to trade through here because a lot of this work was done through Chrissy. So basically, I think we stopped the alerts just after Christmas, just before Christmas, and when we come back on the start of Jan, it already rallied 400 points. So it's a tough ask to rally to jump in there on a thin market, and the market extended lower, then pretty much turned on the dime straight back up. So it was a hard one if you got involved then. Would have been hairy for a little while, but I guess it's paid dividends too. So all we can do now is, yeah, Peter, that's fair enough. We've got our stop still in play at 12:05, so we'll see if that well, it hangs on in there. And that's, if it goes through there, then it's basically, it is bad news. The way it's bounced, I'm hoping that it can hold up above, sort of that 12.10 mark today and then just kick on. But we'll see. We'll get, what was I saying just there? So yeah, it's paid dividends if you bought some stocks in here. I think there's a bit more in play now. We obviously coming to the pointy end between US and China, what's happening there, and I think if they do come to an agreement soon, and then they might go through the stage of coming to some agreement and then nothing it out, and if the US can start reducing on tariffs, or taking the tariffs back off, then that should be a positive. But we're just going to be wary of buy the rumor, sell the fact. Also, always get concerned with that sort of stuff because it's been any good news, the market's been kicking up, and then any bad news on tariffs sort of edging down again, and then kicking back up and edging down. So people are sort of geared up to think if it comes out with good news, and we're sort of not brainwashed. I guess we've been trained to just think if it comes out with good news, then bang, the market's going to go up, and we might find people lob in, and we get sold into, and that sort of rally gets sold into. It's the same as what Trump. Every time it was talk of him winning, the market got hammered. And then when it was Hillary, then the market rallied. As soon as it came out and he actually won, bang, the market took off. So it just cleaned up anyone who was shorting into that news. So I'm just always going to be concerned about that. And for me, it's still a case of high probability setups first and foremost, not something that's really played out. And for me, that means looking at the weekly charts. So really seeing if there's something trending nicely or setting up and it's starting to kick up. It's had a correction on the weekly, you rallied, pull back, and we're starting to rally on the weekly again. The daily's playing out nicely. We've got a high low on the daily, high low potential on the weekly, and major high low. Everything's starting to play out. I think it's a high probability setup, and that should lead to a good little rally. And if it is capped, then it's not going to hurt you too much because I think the weight of numbers will be on your side for a rally, as opposed to getting something that potentially, if this is a stock, you're buying it up here with your stop around 60, for example. It's an extended market. That leg up looks fairly extended. So that to me wouldn't be a high probability setup if this is a stock play. And that wouldn't be something I'd be jumping into on the news that China and the US have come to terms. We'll see. Is there a dance or something to sacrifice to cover my short positions? It could be. It could be. We could just dance around if you like, but we'll try something. So what I want to do today, I thought we'd just talk about basically setting up a trade. I think it's apt to talk about it at the moment. I mean, this market could just keep on going. I mean, let's just have a look at the weekly. Good correction on the weekly. We did something not so much similar. You can see this correction off the highs of around 6,000 back in 2015. That was probably similar. We've had a good correction now, but we pulled back. We gave gave a better entry, and we got that higher low, then more high lows, and that's been a bit more controlled, that grind back up to 64, say. This one, we fell off a cliff, but we just bounced, straight back up again, and we really didn't give any of that weekly high low. It's been daily, yeah. You can see the daily high lows, high low, a little one here, grind sideways here again. So it hasn't played out on the weekly. That's why I am still tentative. I mean, you've got to respect the trades when they play out. You've got to respect the setups and jump in. If either your fundamentals or your technicals the same buy, you still got to respect them, even though the overall market looks like, we're getting up towards the stretch side, both on the weekly and the daily. So how much further can this little rally keep going? Are we due for a good correction? Is it going to be a daily correction or a weekly correction and build that higher low again, or completely tip over through 54? We don't know. We've got to plan for pretty much those scenarios, keeping your wrist tight as well. Because if we're wrong, if I'm wrong and this doesn't pull back, just keeps going, it doesn't matter. We're still in. We're into the market. We picked our high probability setups. They're going to be grinding higher. Now, if we're right and it does roll over and either take out the lows and it's a complete, drop off the side of a cliff, or we just pull back to build a major higher low on the weekly, a lot of those, you'd rather get washed out on those trades on tight risk than having looser risk and letting it, there's times for loose risk when the market's bullish, and it's not bullish at the moment. It is on the daily chart, but that weekly still hasn't really proven anything. Anything could happen just now. So yeah, it's I guess trade management and risk management is the key at the moment still. So I thought I'd just go through a few examples of just setting up a trades and what we're basically looking for. And I think the most important thing always is knowing where your risk management lies. Where are you going to get out if you're proven wrong? And you've got to know where. You have to know that. I think that's one of the most important things with trading. If you don't know where you're wrong, that means your ego is getting in the way. And basically, you probably won't take the risk, and you won't take the exit when it's there, or you won't admit you're proven wrong, and you'll hold on to it. And they're the ones that could go back. Anything could happen. I mean, it could bounce back, and majority of the times you're proven right. That's why um, it happens more often than not that people will hold it and put it in the bottom drawer and put it away, because I know generally shares may bounce, especially if you've got bigger blue chip shares. But it's still a waste of time in my book if you're going to, if that's sort of the way you trade, you don't know where your risk is, you don't know where your trade or your risk management is, where you're proven wrong, then even if it could be proven right eventually, it's how long does that take? You're wasting money, you're wasting time. You can always get back in it at a better price if you're really still keen on it. So I think risk management is really important to know where you're wrong. So I thought we'd just chat about that today. And I think a good example, it's always good to show a winner. A good example for us especially is APT. But I'll just go to that daily. APT. So what we were looking for on this trade, and we've had it a couple of times. I can't remember exactly how many times we traded this. We had this, it still kills me. I had this a long time ago when it became APT at 255, and now, we had it, didn't get the bulk of this move. Just trying to look at where we got. So we had about 3 or 4 trades on this, and just really, I mean, that's probably where it pays to know your fundamentals. And the really market got a bit ahead of itself. I think the last one we got was out of here. We probably got in here somewhere around 14, took some of that on the way up, if that's right. Just looking at my trades. Anyway, so we've had a few nabs at this one. And it's based, that weekly chart, that's quite healthy. It come on here, and I think the name changed, whatever it was before, APX, AP, what was it, AFY, and went to APT. So this market's looking quite good. It gradually edged its way higher here, then had a little pullback, and then you started getting the market really accelerating through here, especially when it cracked $10. It really kicked on here, and then you got this, call it a flag, whatever you want to call it, consolidation with lower highs but higher lows, and that's the market really coming in on itself. You'll be able to see it better on the daily, and then it spiked higher. What we got from there on this weekly was really a press lower, a pop up. So you got these buyers that may have missed it here, they may have missed this, and saw this really ramped up here, still looking at the story, thinking it's great, and then they got sold into, they got squeezed back out of the market. So what we're looking at is this, maybe this overselling, selling is probably maybe out of hand. We're trying to pick a zone, I think what you've got to look at is how far it's gone, how hard it's gone, and really try to assess that. If you're buying in here, I mean, that's an extended, not super extended, but you can see on the weekly, the stochastics, meaning the buying pressure. Buying pressure was quite hard. It was in that overbought territory. It was starting to come off slightly. So buying here may have been a bit tough from your weekly chart. But the problem is, sorry, not the problem, but the beauty is, it was actually holding high and low. So if you're looking down to your daily, yeah, you can take that entry, and it's worked out fine. But here may have been a bit different story. This type of price action, this grind higher, you haven't got the lower highs like we've got in here. Look, I'll mark it up just so it's making a bit more sense. So I just want to go over all the price action and what could potentially keep you out, what could get you into the market. So here, these little, on the daily basis, these high lows, and the market's squeezing in, that's quite clear. Even though the market's sitting up here, it's sort of that overbought territory. So the way I use stochastics, for anyone that doesn't know, when I'm not talking overbought to stay out. I'm just saying, as a probability of the trade, there's been a lot of a buying pressure from oversold to overbought. It's using up a lot of buying pressure, and there's only a finite amount of buyers that are sitting on the sidelines ready to get in, and they may be ready to get in. If they miss it, they're either going to chase it or they're just going to pull the pin and wait. So either way, a move up is going to drag in a lot of buyers. So the way I look at this is going from overbought to oversold. Oh, sorry, the reason oversold up to overbought. It's using up a lot of that energy or that buying pressure that could potentially jump into the market to continue it higher. Now, obviously, using that in conjunction to price action, and price action at this stage was still looking good. Now, and don't forget, this is on a weekly, so you're always looking to your weekly, and this is why I would do it. The weekly trend was up. That weekly price action was looking great, and then chopping it down, because the daily could have actually been, by getting these lower highs in the weekly, the daily could be down to oversold again, and it could be starting to lift again. So it's starting to have another swing back up again. And by looking at that weekly chart in tandem with the daily, it is not a high probability chart, but it's a high probability it's going to have another leg up and really, really start to accelerate. Now, that's what played out. I mean, it's easy to say that in hindsight, but still, this price action, what led to that little ramp up through 20, even what does it go to 23? These 23 highs, it was still a good profitable trade, even though things were starting to look, extended. Definitely up here, I would have been looking at as extended. And then there's nothing to say that we couldn't have got this played out again. The market pressed down, and then you start getting these consolidation with high lows and lower highs, and then get pressed up. And you just buy on the breakout, because then basically you know which way it's going. If you bought it, say, through here, your risk is just below. You know which way it's going once it starts to accelerate back up again. Instead, if this actually punches out to the downside, then okay, you just don't take the trade. It's pretty quick. You don't generally try to avoid taking a trade within there, because you can be proven wrong easier, and it hasn't played out which way the market's going just yet. Okay, as soon as you break out, if we do something like this, as soon as we get to about here, for example, that's our contraction, you've got two entries, a short or long. If we break up through here, okay, we know which way we're going. We're breaking up out of contraction. Buyers are in control, and so on. Potentially, if you come back down, you break through that high low, okay, sellers are in control. Buyers are giving up. So you know what's happening by that stage. If you buy anywhere within here off these, you're not exactly sure. If you're shorted here and you're looking at, you could be proven wrong pretty quickly. And the same on the long side. If you're buying in here or in here and then turn around and bang straight back down again, then you get squeezed out of the market. So you're not sure. It's not proven which way the market's going. Is it accelerating up or accelerating down if you're buying within that zone? But as soon as it pops up, you know exactly where to place your risk. You know that you're on the right side of the market, and you can let it play out. And then it's a matter of risk management after that. Does that make sense to you guys? So if I might just clean up. So just going back to here, the difference, let's take another screen snapshot. The difference on what I see here is that the market hadn't really done anything. You've got the market pressed down, green candle, okay, red candle. You've got a couple of little levels like that, but to me, that's more of a channel. And I've said before, if you get a market's pressed down and then you get a bit of a grind higher, the same as what we saw, perfect example, I like to bang on about this, is the ASX back on the daily chart, this zone rolled over, took out a few higher lows. So that's, the first sign that things are not looking great. The second sign is when it starts to grind higher, there's no conviction in buying again. And there's more conviction in selling pressure. So here it's been grinding up, but it's holding higher highs, higher lows. Here it's washed out a few of these levels and it's starting to grind again. So there, to me, that's saying when it starts, especially after you get a bit of a press lower and taking in a few key levels, you get that grindy action, minor levels, minor higher highs, minor higher lows. That to me is the selling pressure still coming in, is putting pressure on the market. So if we go back to this sort of price action, this is what I'm seeing. And I guess if you break it down on the daily, this is the kind of price action you'd see on the daily. And then to me, I'd be looking for potentially a sell, know where your risk is, because we got that grind higher after a good rejection lower. The thing is, we know that it hadn't broken a key level, but it's that price action, which is a fair bit different to that original price action, which led to the run up. And what it comes after too is you've had a spike up here. So you've got to take these into account, a nice spike up here and that rejection of 23, a couple of good solid down weeks, as opposed to this where it come down, it's holding in the top third. When I say top third, say the market's rallied up here, the top third pullback, say if you can just split that up roughly. So that's where the market originated from. Anything that sort of hovers around the top third is showing strength. The deeper the pullback, say into the, a 60% pullback or within that zone, the second third is showing a bit more weakness. Obviously, if it comes all the way back down to 100% retracement, you just steer clear of it. Does that make sense? So when it's hovering around that top third, which is ideally what this was doing, you rally up, hovering around the top third, holding the highs, that just means there's no conviction in selling just yet, which is a good heads up along with this type of setup that the market's going to blast higher. All right. So that to me is showing a bit more conviction in buyers still, whereas this type of price action, yeah, you're getting these little pop-ups, but they're getting sold into them. Okay, green day, red day, green day, red day. And of course, as soon as it took out a couple of lows or pretty much this swing low, you can see what happened after that. Right. So to me, once you get that, what we've seen is more of a complex correction. For anyone that doesn't know, I'm going to have to clear that up again, aren't I? Actually, let's just do this. Let me delete that. And we'll go open this up again. So you've got corrective action. And this is the way I categorize it. So if this is our run up, right, that's your traditional run up, higher highs, higher lows. Say we come down here, a complex correction, actually, there's two ways to look at this. If this becomes our anchor, I don't want to do that. So we're looking at anchors here, anchor to the trend up. So that's where you're buying on your pullback, you're buying for continuation higher, you're buying for the next leg, pullback, clean out a few, that's just your typical, was it Dow theory? Dow trading, higher highs, higher lows. But from here, what we'd be looking for is if we run up to the highs, why isn't that working? If we run up to the, it doesn't like me, it's gonna stay thick there. Run up to the highs and then fall short a bit, you can correct sideways and you hold pretty much once we touch on that high, or within a few percentage, I'd say this is your new anchor. But if you correct sideways, we wouldn't call that a complex correction, and that could lead to a good run up. A complex correction is more, we have that pop up and then we have that secondary leg lower, all within after it breaks that anchor. Is that making sense there, guys? I just want to say that's our leg up. Okay. A complex correction will attack that anchor and break the anchor, whereas a correction sort of sideways or just continuation, as long as that anchor is not broken and it holds high lows, it's still a bullish move. It's still potentially ready to take out those highs and continue on up. It doesn't have to just go so cleanly like this. You can correct, hold higher levels, still hold the trend up and bang. And what that does, that'll drag in some sellers. People will all see it and they won't really take notice it's broken the anchor. whether it has or hasn't, they'll start selling into it, but buyers are just soaking up and bang, they get squeezed back out again. Any people potentially short or anyone here that's has run up here, they've seen it pull back, they're sort of oscillating between gains and losses, they might just get antsy, get out, and then sell it to the stronger hands or the stronger buyers with a bit more commitment, and then market runs up again. And then potentially if it gets through those highs, they're looking at it, cursing themselves, and chase the market higher again. Whereas a complex correction, you're taking out the anchor. So that's, if this is your daily run up, what that is more of just a weekly correction. Does that make sense? We're talking that weekly correction here before we start running up again. So when you're seeing more of a complex correction, I generally would like to see, and I expect to see, if the markets run up here and we've got a complex correction, I'd like to see it in 2 legs down. And then that's why we're constantly drawing this pattern. Then you've got your high low, you've had 1, 2, it's cleaned out quite a few. It might have broken the anchor, the previous anchor in here. So we're doing this type of action. We break through that anchor and then potentially hold a high low, squeeze back in, and up she goes again. All right. And what that's doing is just squeezing out a few more, putting them back on the sidelines for fuel, ready to run back up again. So that's what we're ideally looking for, and that's what you've got in APT, and obviously that was on the back of news. So looking at that, you got the secondary leg lower. As soon as we saw that play out, I think that's where we're planning. I mean, we were bullish on this for a while now. I can't remember how long when I first started looking at this, but that's ideal price action. You've got the markets popped up, pull back, popped up, pull back. You've got your second sort of, you got that little spike up here, and then the markets ran down. So that's your 2 legs. I mean, it's quite clear. You've got, let's draw that in yellow, 2 legs, complex correction. You've taken out that anchor, bang, we've gone down. So what we're looking for now is the next stage. We want to see if things can hold, and you can see that we started holding here, even a little washout, started bouncing, and as soon as you got this price action, which you can draw, and that pullback, for me, that was ideal. And you can see it starting to curve back up. I mean, this is all in hindsight, but this action is off the weekly. So we've got our complex correction on the weekly. We've got lows starting to hold again at around $11. In this zone, we're starting to get our higher low. If I can just take that back. This zone here, we're starting to get a higher low play out nicely. Is this all clear, guys? Can you see what I'm talking about? High low off the lows through just above, say, 10.50, $11. And then it started to break up out of that little consolidation. That was only for about a month through December, start of January, started to break up. So from there, it's just a matter of looking for your entry. You know that potentially you've had a good weekly leg up. So this is potentially the weekly trend. Leg up, correction on the weekly, and you're looking for this move up here. I mean, that's a very, very broad perspective. But as you break that down to the daily action, okay, that's your complex correction, starting to hold. So we're looking for that new weekly leg up. It's coming out of this contraction here. So again, we're holding higher levels. So all that's saying is buyers are stepping up, are stepping up, are stepping up, are starting to step up at higher levels. And the first sign is they're stepping in here, stepping at higher levels here. And we got that little pop-up, stepping at higher levels again. So it's starting to soak up any selling pressure. We had our first at 15, first sort of resistance zone to worry about. Again, it actually gapped up through that and pulled back. But you can see, am I on the daily? You can see the important thing for us was this higher low and this holding that higher level off around 12, starting to push up out of that minor contraction, through end of December, start of January, had a little 3-day pullback and then started to rally again. So we know that the weekly's working out nicely. It's playing out. We're going from contraction to expansion on the weekly, and we're doing the same on the daily. So everything's starting to line up beautifully. And so all we had to do really is plan our trade, look at our entry, and we got lucky enough to enter through 14. I don't know, what was that date? Yeah, it was on the 16th. The next day was good too. It was looking good. Then it gapped up, and it's been up since then. So is that making sense how what we're looking for, and especially too with this setup, for example, we know exactly that was our entry. We knew exactly where our risk is going to be. Okay, so we've got, and what we're trying to do with all this price action we just said is all we're really trying to do is trying to get the probability on our side, and you can see that by the market holding higher levels, especially when we pumped up there. Okay, any selling pressure come back in again off the recent high, and it started, buyers were stepping in at a higher level. So we know exactly we've had that big correction. Buyers are starting to step in back in at higher levels. That's working in our favor. It's got a high probability set up, and we know exactly we're buying through 14. If it breaks up through 14 after here, we know exactly where our risk is going to be, because if it broke up through here and again held 15 and then rolled over and took us out, I don't want to be in the trade because I've got something wrong. Okay, all my analysis is pretty much thrown out the door after that. And I'm not willing to risk too much. I'm not willing to risk, buy at 14 or even buy through 15 with risk right below, say, $10 or even $11. I think that's way too big a risk. But with this style or with this analysis, you know exactly where your risk is going to be held. And then from there, it's just managing your risk, and it's just managing your exits. And you can see, markets pressed up, pull back, pressed up, pull back, pressed up, and it's still on the way up. So we've just been raising our stops since then. Yeah, no, that makes sense there, Peter. I think I don't like that gap up here, and I wouldn't have probably entered after that. But what you can see is it's still holding higher levels. All this price action through here is still holding higher levels, and it will probably just take a different color here, especially after that gap. So it would have been, you could have had another entry through, and because all you're trying to do is, not all gaps fill. Everyone talks about, oh, you've got to fill the gap. You don't have to. I mean, the market can gap up, have a minor pullback, because there are people, but if it's a strong market, it's just going to go. It's not going to worry about filling that gap. Um, it doesn't have to. There's nothing hard and fast in any rules in the market that says it's going to fill that gap. It's just makes it a bit tougher. But if you're seeing this, if you didn't buy at 14, for example, and you got that gap up and you got a big red candle here, but then it started holding again, and each day it's starting holding higher lows, daily higher lows, and then a couple of reds. All that was really squeezing in higher lows on the daily, and then you got your entry again, potentially through that 1650, and your risk is around 1550, $1 risk. And if it broke out, if you're proven right, you know exactly where your risk is. And that's all we're talking about, risk management, because to me, even if that was, if you didn't buy it at 14 where we did, and you were looking at it about, say, the end of, end of Jan, you still had a little setup there. After this gap up through, what was it, through 15, you still had your setup. And you can see that there is still buying pressure in that. It's still buying it, and you still got this major structure in play. And that major structure is really, let's go back here, press up, pull back, press up. So we're gunning for the highs. I'd love to see it go through 23, and I don't mind this price action, the way it's been grinding up here, grinding up to 23. I think that's looking quite good at the moment. It's more controlled than seeing spike up here, spike up here. That there is more, what would you say, euphoria, or that FOMO, fear of missing out, people chasing it, whereas here it's a bit more controlled. It's grinding up. Any sort of minor pullback is met with some more buying, ticks up, ticks up, ticks up. So that, I think, could lead to a nice sustained move up through at least 20, potentially into new highs, and then we'll just have to assess it as we go, see how it goes. I hope that makes sense of what we're talking about planning a trade, and especially knowing where your risk is. If you're buying into this sort of area, you're buying into here, you've really got to know, especially if you're looking on that breakout, say you bought it on that green candle, your risk is going to be all the way back down below the higher low here. So was it 1507? So your risk is at $15 with a break through that high of 1750. So to me, I wouldn't have liked that, because it's just too much risk for me. I'm happy to leave it alone, and especially after this type of price action. But the fact that we've got a bigger washout, and what this action is doing on a bigger basis is setting up and just cleaning a lot more people out, putting them back on the sidelines, whereas this hasn't really cleaned out anyone. It hasn't broken the anchor. It's still up. You could have bought that there. Then you really do have to know where your risk was. And I think we were at one stage, if you can see this. Sorry, guys, before I keep going, just put in some stock codes, because we're putting in about 10 or 15 more minutes. Put in some stock codes and we'll have a look at it. What was I talking about? So this here, this could have potentially been another entry. And I know I do give up a bit, if you can see this. But I give up. If this was a trade down there, because we haven't broken the anchor, you still got to respect that anchor. At that stage, that was the anchor. The market's pressing up. We pressed up here, so it's taken out that lower high off pretty much that double bottom. It's pressing up. So I'd like to see a pullback and then buy on a break, which it didn't play out. It probably missed it by a few cents. Let's check. And that would have been my entry with my risk around the 17 mark and looking for that press back up to the highs. Instead, it fell short, and I don't know if it retested it. What was that high? High of 1850 and a high of 1840. So it missed it by 10 cents and then rolled over again. So by doing that and by knowing exactly what your entries are, not just chasing it, it can actually keep you out of trouble quite a bit as well, if that makes sense. So by just looking for that entry off the double bottom here, and you're looking to go into expansion again, and there's no reason why this couldn't have played out. It could have gone through that 1850. I've got my stop below the low at say 1710. I'm not risking too much, and I'm looking for the market to go into expansion. Now, if I'm proven wrong, I get stopped out. That's the name of the game. But I'm putting myself in the right zone with the right price action, with a positive market, and I'm looking to go from this contraction into expansion. Now, contraction doesn't have to be 2 legs down. Don't forget, it's had 1 leg. Okay, sellers at this stage were still looking. They pressed it back down. Buyers stepped in at hold up support at 15, started to lift it again. And if they were going to lift it, they were strong. It should have broken up through that high, and it really shouldn't have looked back. Instead, it fell short, tipped over, and then you got that secondary leg down. So as soon as you got that complex correction, you've got to take into account that and look for a better price action to start holding higher lows levels again. This one here sat on top of the MAs beautifully and started to lift. So we know exactly where our risk is. Everything's playing out, and away you go. There was one other I just want to touch on. This, and I don't like. I saw this on the weekly, sorry, on the daily, and I didn't mind this zone here, except the weekly still. I probably wouldn't have got that in, especially the way the market was coming into. Well, it was the end of the year or the start of Jan. We were away that time anyway. I was at the beach. But that price action there through the end of December, start of Jan, when the market was bearish, well, in my opinion, was still bearish, and looking at this price action on the weekly, I would have probably steered clear of that anyway. But as it's played out, the market's pressed down. You've got this good run up here. It's consolidated that high, and that's just taking note of that high. And don't forget, we were talking about 2 legs down. It can happen if the market, let me just go back a step. We're looking at this price action here. You've got one big leg, big bounce, secondary leg down. You can easily have 2 bounces, even if the longer term trend is down. So that longer term, I'd say, is down on the monthly. There's no reason why you can't have 2 legs back up, still hold the trend down on the monthly. This could topple over here. But because it's a weekly, you can break it to your daily, and you still got, a pop. Thanks, Finn, mate. You still got a good little trade on your hands there. Does that make sense? On that weekly correction back up and the monthly trends down. So you've got to take all these little things into account. If it's a big time frame, like your monthly or weekly, you can still pick out a daily trade. But you have to bear in mind what's happening on the weekly. Is it getting extended? It's ready to roll over on the weekly, because that could mean a lot of selling pressures coming in from the sidelines, and they're just going to jump in and hammer it lower. And if you don't realize that, you can have a handy 5-10% profit turn into a loss pretty quickly. And this is probably one of those cases, if you just remember looking at that weekly trend down, little correction up, trend down, potentially this is a correction up, and then we're going to trend down again. We don't know that. But the fact that we've had that pop up from here, that consolidation, and then this zone here is very clearly where we've cleaned out, popped back up, starting to hold higher levels here. That was well worth a trade through a break of 290. Again, in hindsight, we know, and we're going to have our first problems are going to be at $3. It's just broken straight through three, had a day or two retesting 3, and then took off again. But from there, we knew exactly where our risk was going to be on this. Does that make sense? So what we've got, we're looking for 1, 2, 3 legs higher. So that's the premise of the trade from a weekly. We're just looking at deeper correction on the weekly. We're looking to take advantage of that second leg up. The same as, if you're going to go short on a complex correction on the daily, on the downside, you're going to go short into that. It was just what we were talking about on APT. We'll just step back a bit. APT, this type of thing. We're looking for bang, up, failed here. You're potentially looking for that complex regression. You could short into that. It would have been a lot tougher. It's always a lot tougher to go short than go long. But the premise here was that, okay, we're correcting up. There's going to be a lot of buyers still holding on to it. And if they start seeing it roll over again and they're looking for that second leg lower, they're just going to bail. And that's why you get those secondary legs lower, and it just cleans out a lot more people. There's no reason why you can't short that, the premise that we're going to have that second leg lower. And that's the same on the upside. We're looking for this premise in yellow, and we're basically just looking at it in here. So you've got good strong leg up, okay? Consolidated, broke through the highs. If that was going to be really, really strong, it should have just gone from here, not taken out this low, and bang straight back up through the highs. You could have had an entry there, and you don't really want to see, and don't forget, this is pretty much 100% pullback of this tiny leg up here. As soon as it pulls back there, I'm thinking twice about it. I want to see it hold here maybe a few days and then go again. And then what that does is minimize their risk a hell of a lot and mean that we're buying into still the market's still expanding. But instead, this market rolled over here, took out the lows. Okay, so for me, once we see this little wash out of this previous lows, it's just, we're talking this here, that's your low. We've washed out those lows with that push down. Previous lows there. You've got to be thinking a bit more bearish there. You might be looking at it going, sorry, I'm going to have to go in about 5 or 10 minutes. You got that press down, that pop back up. So from here, I could have been looking, okay, we're going to have 2 legs down. There's going to be a deeper correction of this major leg up, deeper correction, and then look for an entry like that. Well, something like that anyway. Something more like this, and then I'm going to enter from a better zone, better pricing. You got a 50% retracement of the leg up, and then in you go. But instead, what you did get was market starting to hold. It's chopping around here, but it's holding these minor levels. So you go, oh, hang on a sec. This is showing a good sign of strength. That to me was just a clean out of this recent level. So this is your one leg up. This is your pullback, and it's consolidating these highs. You've got an inside level. Now, if I was looking for on this secondary pullback, it started to hold again. You've got these couple of green candles. You could have easily bought through 290, say in here, put your stop below 270, knowing that you're not risking, but knowing that this price action is potentially going to go for a secondary leg up. Remember that weekly premise, the secondary leg up, and just see where it goes to. Now it's played out beautifully. We didn't take it, obviously, but I thought I'd just point that out because obviously price action comes in all forms and in all shapes and sizes, and you've got to analyze what's happening in conjunction to the bigger time frame charts. So you've got an overall feel of what the market's doing and what could potentially happen. Is it worth throwing risk at it? Planning your trade accordingly, knowing exactly where you're going to be proven right or wrong. So APT, we're proven wrong if we bought into it here and it didn't gap up there, bad report or whatever happened, took out that low. I know where I'm wrong. Something's happened that I don't expect. I want to be on the sidelines assessing it rather than be in something that's not working for me, going against me, and then having to chase my tail at a bigger loss. I'd rather be out and reassessing it. If it does kick on again, I can always get back in. All right. And maybe have to give up a few gains to get back in, but that's the nature of the beast. And that's the same with just the one we were talking about in here. If I got in here, I know where my risk is. I expect this secondary leg to, we'll just do it a different color. I'm expecting, with the green. I'm expecting 1, 2, I'm expecting that secondary leg higher. I'm buying into that rally. I'm buying into that expansion. And if that doesn't play out, I know exactly where I'm going to be wrong. I'm going to be proven wrong around, say, 270 or so. And then I just sit on the sidelines and go again. Futures channel on Globex. Unfortunately not, Jamie. You're talking about a trade live stream? Shoot me an email, mate, at support@tradesetup.com.au and I'll see if I can find something. Anyway, that's probably about it for today. I'll just see quickly if I can go over VXR, and I'm going to have to do a runner. So for me, daily it doesn't look good. I'm not buying here because on the daily my risk has to be down at 16. Not worth it. Extend it up here. Rather see a pullback, show strength, higher lows, and then jump into it. The weekly is actually not too bad, and the weekly is because it is holding higher lows. All right, so you've got, if you watch this later, Vin, we've actually got that high low. So this is what I'll be looking for. Okay, there we've just broken up through here. So if that's the case, you've got a market that's contracting here. We're going back into expansion. So really, that's our expansion. All I'm looking for from there is potentially somewhere to buy into and minimize the risk. Because if I bought here through 25, my risk is down here at the moment. And generally, I find we haven't really got a higher low. We've got a retest of those lows at say 16. It's pushed up. We've taken out the most recent lower high, say just around 25 mark. That's pretty much today. So I'm looking for this now. If we just draw that up properly. So this was pretty much a retest. So that's a price action in green. Here, 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 and here. I'll be looking for what we see in red. I just want to see a little pullback, show strength in buying off a higher low, because if you, again, this is your leg up. If we consolidate at the top third of the leg, for example, touch down on 22, chop around here and start to go back up, you know exactly where you're going to enter, you know exactly where you're going to place your risk, and you're looking for that expansion potentially right up to 40 again. So off the weekly, shown some good signs, but I wouldn't touch it just from the daily just yet. I want to see, better show of strength. Anyway, guys, I'm gonna have to call it a day there. I have to do a runner. I'll don't forget we're back in on Monday. So we're back in on Monday at 12:30, just the usual, 12:30 to 1:30 on Monday. I have more time to talk on Monday. Any questions you do have from this stream, feel free to send through some emails. I'll always get back, and then we'll just go from there. If you've got any questions, if something's not making sense, send an email through to support@tradesetup.com.au, and then I'll get back to you. Or if it's something that's worthwhile talking about again, we can just chat about it in the next stream. It's a good little topic to talk about. Yeah, so we'll go from here. Thanks very much for joining me. Back in on Monday, and have a great weekend, guys. Cheers. Bye.